Okay. This is I can't wait for it. And today we are going to be going over discovery. And I said this about a week ago, and I charted it out, and we found the bottom. And I'm going to show you how tight we found the bottom. This is the absolute bottom. It's still not too late to get in. So if you are looking for a good play that is going to go gangbusters, this is the one. So now Discovery just had a merger with AT&T. Now Warner Brothers and Discovery merging together, and AT&T jumping in on the action as well. I'm not quite sure exactly the whole dynamic of all that. I don't really care. I just know that this has taken a very healthy dip down into an area that is extremely attractive to get in on. And if you're looking for a strong play that moves, this one moves. And so I'm going to break it down a couple different ways and show you why this is a good place to get in. And first, I'm going to start off with the Wyckoff method. So you got your buyer's climax here that comes up, and let me grab one of these arrows there. Okay, buyer's climax right here comes up. Price action reaches a new high, starts to fizzle out. Last, it dips down. They do push it to get it to go to last right there, and so then they have a automatic responses where it starts to fizzle out, and then your institutional buying actually dumps off all their shares. And so this would be your buyer's climax, which is stage one for me, which is that your last previous high on the curve, and then your distribution coming down right here, which is the automatic response of the institutional buying. They dumping off all their shares, and then it comes into this area. So usually you have like three bounces, two, three, and then this big green candle here is where they buy up the float and take recontrol of the float right there. And once they get control of the float, it stops dropping and actually just kind of consolidates sideways and does three bounces. Once they control the float, it'll do three bounces as well. One, two, three, and then it'll go up again. Now, if they can't get control of the float, then they distribute again, two, three, and try to reaccumulate to grab out the float. And then that's when it actually starts to move up. And so, two, distribution, going into the major sign of weakness. And then you have a secondary test, which is that guy right there that is one leg up higher than this low right here. Another secondary test. And then it comes and tries to do it does a final dip into liquidity because it can't get control, runs up again, drops down. So now this pop up right here was all it really needed to go up on. So if you look at this Bollinger Band right here, 3-4 is when it hits the upper Bollinger Band for the first time after it does distribution. So it comes sideways after it comes out of the drops out of the Bollinger Band there. Price action moves sideways coming in here, pops up, hits the top Bollinger Band. That's 3-4. And that's so that 3-4 is always going to be, not always, but tends to be lower than 1. But that is the midway point of the curve, and that's when it actually sets up to go for a new high again. So then it comes down, hits the bottom Bollinger Band. That's 5, which is going to be the spring. And so it's right here. It dips down, riding the bottom Bollinger Band, pushing it down. And then your change of character in this movement right here is when you have this green candle that is engulfing this red candle. And so that's your change of character. That is your signal to get in, because that means it's getting ready to launch. And so you might have this green candle come up. You might have a final dip in liquidity, which this might have been the dip right here, and then this is going to be the launch going up. But either way, if you got in here, price action shouldn't drop below this area, and if it did, it wouldn't go very far. You got your red trend line right there. So it probably will launch. This is going to be the spring, so this should be the launch that goes up for a new high, which would be 1, which would be coming back up to the top Bollinger Band again, but it should start pushing up to try to regain some of this lost ground that it did right here. So you've got a long ways to go to regain this ground. So that's what I like about this curve, is that it's got plenty of room to move, and it looks like it's high, kind of holding this area, and the only reason it's going down is just trying to regain the float. And so that that should be good. Uh, right there, that should be a good move, moving up. And so that's the Wyckoff. You got your spring, and then it breaking out of the your points of structure, and then finding support on the point of structure, and then breaking out and going long. So your node would be right about here somewhere, and so it's going to come out, This is going to break. It's going to go up, bounce off of this area, which is going to be like the $36 range, and then go up, break above the 39.64 area, find support on top of that area, and go up again, come back down, dip back into liquidity, which is probably going to be somewhere between those two areas, which is probably be about 37.50. Find support right there, and then bounce out and go long again to try to break for a new high, to try to regain some of this area in here, which is going to be like that 50, 40, 50, 60 area, depending on how much support from retail we get on this run up. Now, it might have to stop and come back and reaccumulate a couple times, but it's definitely going to start moving that way. So that's why I like this stock. And so I'm going to look at some other things here. If you draw your trend line from here down, you'll see that price action is riding this downward movement right here, and it breaks away from it here, and that trend gets stopped. And so I've got it a little bit too high or too low. Let me adjust this. There, that's your trend line. And so we've got a trend right here coming down. Price action's riding the top, riding the bottom of it, coming down. Price action breaks that trend coming up, and then comes back down, which is the start of the end of this downward movement. And so then your price action you follow after that, as it comes back down, it actually dips back down to this trend line, finds support on it, and then launches back out of it. And so I actually liked it better. This is just one of those things I see in the market that intrigues me enough to kind of want to make a rule set off of it. If I find there's a better place here somewhere. I think it's right here. There it is. So price action cuts across here, hits this one, wicks up to it. This one kind of goes past it, wicks back down, or solidifies back down below it almost. Hits price action here, and then price action it's kind of like riding the price action here basically. And then price action breaks away from the trend line, which is the important part. It's like instead of being under it and breaking down below it, it actually breaks above it for the first time. And so now it's breaking above the trend line and putting space between it and the trend line. Pops up here, comes back down, solidifies on the trend line right here, prints candles going down on the trend line until it gets to this point again. And so this is the next here. That's the breakaway right there. Comes back down and starts solidifying on top of the trend line this time, using it as support instead of resistance. And then also as a spring, it dips right here and then starts producing this green candle, which is your change of character. After solidifying on it, it's got the solid green candle being formed, which is showing you that it's about to spring off of that trend line that's using as support as it's going down, whereas it was using it as resistance as it came across this whole area right here for about a month. And so that's what I see in the market is this. I see this resistance being used as support, and then it's bouncing off and going long. And now, if you look at the price action, the candles here, and I know it's super small, so let me make it bigger. I'm bad about that. Sorry. I just see things from so far out. I forget that people are looking at this. All right, so again, price action using this as resistance, coming down, breaks away from it for the first time. Now it's above it, comes back down, solidifies on top of it, using it as support. That's the significant, those three steps right there. One, as resistance. Two, the breakaway. Three, thus now solidifying on it, using it as support going down. Three key steps for this move to work. Once that happens, then it has a chance to use it as a spring to bounce off of it. So this would be the spring, which is 5 on the curve. Boom, starts to bounce off of it, and then it's going to launch from here to go for a new high at this point, which means breaking this area right here at $40. So we're looking at almost a $9 to $10 run just to get to the high up here. Even if it just matches the high and then comes back down, that's a $10 run. So that's why I like Discovery right now, is because we've got this everything being created in the right order. You got your resistance, the breakaway from it, now back on it using it as support, that same line, creating a spring, got this bullish engulfing candle forming right here, getting ready to bounce up to go long, and you've got a $10 run just to break even to the last high. So even if it stops there, that's a hell of a run, and that's why Discovery should be at the forefront of the things that you're watching right now, and probably something you should be considering on taking advantage of right now, because there's a lot of activity going on with it, with the merger and everything that's going on. It's had this huge run down, correcting itself. It had this spike showing you where it wants to go, you know. And typically, whenever you have a consolidation area over X amount of time, and then you have one candle that pops up that's out, that's different from all the other candles, showing you where it wants to go, and then it has a dip after that candle, that's the dip before the pull. And so this is a classic move. It happens all the time. You'll see consolidation that goes for a long period of time, and all of a sudden you have one candle that stands heads and tails above all the other candles, then drops down and goes into a dip, which makes people think that that was like a touchback to like the last node or something, and then it's just going to distribute even further. Now that's its first move, is to do this, is to try to go up for a new high. But if retail doesn't get behind it and fails to, to support it, then yeah, it drops for a new low. But if everything happens the way it should, which it has right here, you got your resistance, the breakaway, back to support, using this as support right here. It hasn't broke that line. Now it's getting ready to spring out. This should keep going up and break for a new high. And if nothing else, just match this last previous high, which is going to be close to $40. So that's what I see on Discovery. I can't wait for it. If you've got any questions, please put comments in below. Love answering questions, love charting. I mean, I do 2 to 3 of these a day. Um, if you're not asking questions, you're not learning. And if you look at all my other, trend lines and everything, predictions or whatever you want to call them, there a lot of them have been positive and have made profits. And I love doing this. So please like, subscribe, follow. It's the only way I can gauge whether or not you're even listening. So thanks again. I can't wait for it. This was Discovery. It's one of my trades that I've been watching. It's definitely one that I'm in on right now. And to explain that right there, I measured the distance of this drop right here to here from the high to the low, and then you should get about 3 times the result back out of that movement going up. And so if that's true, then it's going up to $64. Whether it does it or not, I don't know, but that's just one of the things that I've seen in the past that I've been gauging, and that's what I gauge this on. So, anyways, again, I can't wait for it. Please like, subscribe, follow, and let me know in the comment sections what your thoughts are. I'll see you on the next one.